Well, hello, traders and investors. My name is Roger Scott. Today is July 8th. And again, where has the year gone? Today is a Wednesday. We've got a lot of stocks making new highs, but the markets are getting a little nervous. So I want to get into the news, and then I want to give you 3 stocks that I still believe will have upside, even though the market is overbought. I still think there's 3 assets. There's a lot more, but I want to show you 3 assets that I really like, that I think are due for a little bit more of an upside. And I'll give you my support levels, my resistance levels. I'll give you my ideal entry levels for 3 of the best bullish positions right now. So as I always say, let's get into it right now. All right, let's start with the news so we can kind of get a good overall feel for the market. I'm always doing this because I want to see how the overnight market ran. This gives us a good feel without having to sit there and watch the overnight market tick by tick. So global markets were mixed Wednesday as uncertainty. That's right, there's still a lot of uncertainty over COVID-19 pandemic sapped buying enthusiasm that has been driving prices higher. We've been just on a tear, folks, and momentum levels right now are like this. It's like a rubber band right before February. That's how the market internals are looking right now. So I want to preface that. Although some Asian markets fell, trading overall was relatively calm, said Jeffrey Haley, senior market economist at Onda. Much of the region concern is focused on the rising cases in U.S. as Asia needs a recovery there to attain growth. That's very, very true. Optimism that the U.S. economy is on the mend as businesses reopen has helped drive stocks higher. Oh boy. But the recent surge in new COVID-19 cases has clouded hopes for a relatively quick economic turnaround. Folks, this is a big mess we're in right now, and it's going to take a couple of quarters to get out of it. So brace yourself. The markets can't just continue going up like nothing happened. It just doesn't work that way. Investors are also grinding for what's next week's will reveal the health of corporate America as companies begin reporting their revenue. Very much so. They're actually already started, but officially they start reporting next week. Unofficially, we already have about 20 of the S&P 500 numbers, and they're not that great. They're medium, but we're expecting a real downturn this quarter. So this is supposed to be the worst of it. Let's fingers crossed. Unprecedented amount of aids from central banks and governments around the world help to prop up markets, but the worsening infection level across much of the U.S. are countering that support. But the good news, benchmark crude oil. This is the production cost, relatively speaking, more or less, about $40, $41 a barrel. So at least big energy companies are not bleeding, and that's going to help support large crude oil companies, large oil producers, frackers, refineries, ExxonMobil, companies that have massive market share. I don't know if you guys realize, but the energy sector is one of the biggest sectors. I think it's the second biggest behind technology. So it has a lot of market capitalization. But today is Wednesday, and Wednesday I want to go through my 90-day breakouts. These are 104 stocks that are making 90-day highs. Now markets are overbought. I want to show you something here. I showed this to everyone yesterday. Some looked, some didn't. I really, really need you to pay attention to this. This is really big. If you look at momentum levels, I'm going to go to the Nasdaq. That's the sector that's just going nuts right now. We're looking at the Nasdaq 100. If you look at the 50-day line, the number of stocks trading above the 50-day moving average, you will see that that rubber band is stretched out right now. So we have to be very, very cautious, and we have to pick stocks that are not overbought. A lot of these stocks have been running up so much that they're a little overbought. Like look at Square. I love this stock, but it looks like it needs to cool off before going up a little bit. But there's a few stocks here that I still have my eyes on, or a few assets that I have my eyes on. The first one is GDX. Let's put it up here. GDX follows gold miners. And I don't know if you're aware of this, but gold miners have been coming up. Look at that. That's the last 3 months. This is the last 6 months. And right now they just broke the 90-day high. Typically, with the market being overbought, now I'm thinking ahead a few steps. This is how you should trade the markets. Think ahead. Markets are overbought. Nasdaq is stretched out. What happens when stocks cool off? Gold tends to go up. Gold right now is positioned to go higher. It's breaking out. It's at a multi-year high. This is 1 year. Let's look at 2 years. 2 years high, 3-year high, 5-year high. We're at a 5-year gold high, folks. That's not good. Now, the market was higher about 2013. Yeah, we're like at a 6-7-year high right now. So gold prices are breaking out, and I love the fact that this congested. The longer something congests, the better the odds of seeing a breakout. So I really like this. I like this asset near, I would go long right around the 38.30 level, 38. So how about 38.75 level, just to be on the safe side? And if it hunkers down, I would put a liquidation stop right below the 50-day moving average. You notice it comes down and then comes back up. I would put it like right around 33, 32. So buying around 38.70, liquidating right around 33.50-ish level. So that's the first stock. It's actually not a stock. It's an ETF, gold miners. So that's number one. The second one, let's continue. See, I like the way these gold stocks are looking because they congested. They're not just going straight up. When an asset goes straight up, that rubber band, that momentum levels gets really, really overbought fast, and that rubber band snaps. But when you have a up period and then you have a congestion, that rubber band loosens up and it's able to get stretched out again. And that's the reason why I like these gold miners right now. So see, these stocks are all overbought. They're too stretched out. Now here we go, AbbVie. I like this stock. Let me put it up here. What's the ticker symbol? ABBV. ABBV. Here we go. This is a medical stock. Again, I'm trying to stay away from the technology. Notice it's congesting. It looks like it's setting up for a triangle. Let me add a little drawing tool. See, that's a nice pattern, and volatility is not going too much. It's not overbought. That's what I like about it. Again, you can see here just, I'm no Picasso. Let me add this trend line here. See that ascending triangle? It's breaking out. I like that. And again, it's not overbought. It's not doing this parabolic move right now. After these parabolic moves, you got to be really careful. Or when a stock is setting up for this kind of a up, it tends to congest. And I'm trying to avoid that. But this looks like a nice consolidation pattern with an ascending edge to it. And I like it. While the stock, I believe, is making, no, not all-time highs, but coming out, multi-year high, which is great. So I like this stock. I would be buying right at the 101.50 level. And if it breaks down, I would liquidate it right at around the 95 level. And again, these are position trades. So I would be buying right around the 101, 102 level. 102, just to be on the safe side, buy at 102. If that's what you're thinking of doing, buy 102 on a buy stop and liquidate at 95. So you've got $7 risk on the stock, which is about 7% of its value, which is reasonable and gives you a good edge to make money if the stock continues going parabolic. So ABBV is the first stock. The second stock was GDX, or GDX was the first stock, and ABBD was the third stock. The second stock, excuse me. I'm all over the place. And let me give you a third one. Again, I'm looking for congestions that are not breaking out. And the third one, there's a few good ones here, really, a few good ones. I like this bond market, BND. See, I'm being defensive right now. Simply because tech just looks too stretched out. And if you look at it over a 1 month basis, notice it's making highs. And again, I like this around, it's not enough volatility, I just realized. Let me give you another one. How about Xbi Biotech? Again, nice congestion from a breakout, Xbi. I want to stay away from technology right now. So I'm looking at assets that are least correlated to technology, because technology is on a run. So this is the 9-month chart of the biotech, S&P Biotech, and there's a lot of money coming into biotech right now because COVID-19 is a biotech and a pharmaceutical type of an issue. These companies are getting together, and there's a lot of government, a lot of grants, a lot of cash coming into these sectors right now. If you look at medical stocks like Lilly, like Regeneron, they're making all-time highs right now. But I like this. I like this stock. I like this biotech, XBI. If you look at the profile, you will see it's got a lot of names that are moving up right now. constituents, sorry, not profile. Yeah, you could see here NVTA, NVAX, a lot of stocks. BMRN, that's a stock that's making highs right now. Amgen's doing real well. So I like this sector right now, and it can really, really move. So let me give you some entry and exit levels for that. XBI, again, let me show you why I like it. And again, my drawing tools aren't pretty. We've got a nice little ascending with a nice little congestion. So I'm looking at a buy. I like stocks that are making higher highs, but the volatility is not expanding. That's a volatility expansion. That's volatility expansion, and it leads to congestion. But after congestion, you have upside. Markets have two rhythms. What I'm about to tell you is probably one of the most important things you'll hear. Markets have two cycles. They go up and they go up and down, and they go sideways. The longer they go sideways, the better the odds they're going to move vertically. The more they move vertically, the better the odds they're going to start moving horizontally. I know that sounds really simple and basic, but trust me, I've been doing this for many years. Start looking at stocks this way. So the more you see ascending, think horizontal. The more you see horizontal, think ascending. So we're seeing an ascending triangle. I would put a buy stop right around the 118.50 level, 118.30 level. It's pretty safe there. And if it breaks down to the 110 level, I would be out of this. So again, about the 118 on a buy, 118.30-ish level, 118 level on a buy stop, and liquidate if it gets to about the 110 level. Now, folks, I wanted you to notice something. I'm doing all of this analysis before the market opens. I'm figuring out my levels, and I'm figuring out what I'm going to do, but I analyze before the market opens, and then once the market's open, I execute. And that's something I want to talk to you about today. Now, did you know that with very little effort and in just minutes each morning, you could earn 261.42% return with my favorite trading strategy? That's right, my favorite trading strategy. You see, a lot, and I mean a lot of huge trades are being placed before the market even opens. So if you can spot these before the bell rings, you can piggyback off these huge money moves and make big gains with safe, ultra safe blue chip stocks. That means you can earn thousands every single day, all while you're enjoying your morning coffee. Folks, start making money while others are sitting behind other cars in traffic, looking at their watch, trying to get to work. By that time, my day is almost done. Receive the details. I want you to receive all this. I want you to get in on this. Are you guys ready? Figure out what the market's going to do before the opening bell. Execute after the opening bell. All right? If you could spot these moves, you can piggyback and make massive potential returns. Click the link below. Learn how to get in on this now. You cannot afford to miss this, especially in the current market cycle. Everything is being driven by global economy. Global economy works overnight and sets us up for the US market during the session. This will give you an unfair advantage and show you how you can create good, consistent returns during market hours. Follow the link below. Get in on this now. Bye. Talk soon.